I'm going to discuss some of the incredible ways that exist to lower your taxes. Now, I know this subject isn't the most entertaining, so I won't go into very deep detail, but I'll give you enough so that you wish to explore it further. You'll have something to go on. One of the things Amanda and I love to do in our spare time is travel. So this first tidbit was one that fit right into our lives by investing where we travel. As long as the primary purpose of the trip is business, all expenses, including hotel, airfare, meals, etc., can be deducted. So we spend more time doing business than recreation, which isn't hard when you're a real estate investor. We're always looking for new opportunities. As our motto says, simple acquisitions is smart, secured, simple. If we look at just the smart part of it for a second, anybody can buy a piece of real estate and collect the rents. But how do you do it to take advantage of all the other benefits that real estate has to offer? Let's start with the title. We've researched the best way for us to hold title to each one of our properties. And for us, using an LLC allowed us to be able to choose how we were taxed, since LLCs are flow-throughs. The next easy yet profitable thing we learned to do was to convert some of our personal expenses into business expenses. As soon as you make something an allowable expense, you've earned that money and make it tax-free. So you've easily sheltered a portion of your earnings that you don't have to pay taxes on. United States laws requires that to be a business expense, you need to adhere to these three criteria. First, it has to be for business purpose. Second, the expense must be customary and usual, which means it's typical within your industry. And lastly, it must be necessary to generate money. So, deducting meals and entertainment will help bring your taxable income down. Even if you're having dinner out with your spouse, who is your business partner, and you're discussing business before, during, or after, that qualifies that expense to be a business deduction. So start treating your investing as a business so that this and other expenses can be allowed and you'll effortlessly lower your taxes. For those of you who have families, this is an easy and an immediate way to cut your tax bill. Put your kids to work in your business. It will allow you to shift some of the income from your high tax bracket to a lower tax bracket your kids are in. This strategy can be used for those of us who have elderly parents who have retired and are in a lower tax bracket as well. Include them in your tax planning. This next tactic is more of an administrative item. Document everything. If you're planning on using an expense as a deduction, you have to be able to demonstrate that it meets the three tests we discussed above. And you'll want to write on that receipt who was there and what the purpose of the meeting was. Documenting everything will not only help you file your income tax returns at the end of the year, but it will also allow you to know exactly what your earnings and expenses are so that you can make informed decisions throughout the year on your investments. The next approach we're going to discuss is tied into the greatest advantage of investing in real estate, depreciation. Actually, if you're not already investing in real estate, this one advantage alone is well worth your while to start. As you may or may not know, depreciation can shelter the income you generate from your real estate from taxes. Well, cost segregation is the mechanism of how to make that all happen for you. In order to be able to depreciate your property, you'll have to have either a professional engineer or a CPA do this study. They will, in essence, sever the property into 4 different pieces, on paper only, of course. This is how your property will look after the segregation study. Instead of it being just a property with one lump sum value, it will be separated into 4 parts, each with its own value and rate of depreciation. You'll first have the land, and of course that part does not depreciate. Next, you'll have the improvements that were made to the land, such as landscaping and fencing and the asphalt driveway. Then of course there is the building itself. And finally, any chattels inside the building. These are things that are not essential to the operation of the building, such as floor coverings, window treatments, the cabinetry, etc., which will be allowed to be depreciated faster given giving you an even higher depreciation amount. I don't want to overburden you with what most people consider a very dry subject, so I'll save some of these other strategies for next time, where we'll discuss a few more things for you to consider in helping you